Okay, so this is a popular um, a guy that talks about the markets, trading with Rainier. A lot of people love this guy. I can already see why. He's not ugly. And then you have this, he's got a trademark down here, and he's got blue and red, which is like a buy and sell. And he has the secrets. Now, I remember when I first started to trade and looking for, the Holy Grail is secret. I thought, well, that definitely, I know this is a cheesy thing, but maybe he does know something. I don't know. But he's going to take you through the classic checklist here. I sped him up. I don't know if people are going to, this big copyright witch hunt out there, like it matters. Like, people are so stingy now. They're going to hunt you down for 10 cents. I just got a thing in the mail that from an old business I had, and it said, we're doing a class action lawsuit against the supplier that supplied your materials. And I'm thinking, is this going to be one of those, like, I'm going to make 10 cents? Who's making money on that? The attorneys? I mean, I got nothing against people chasing ambulances because somebody did get hurt, but let's face it. Okay, let's continue with MACD, indicator secrets. I just don't think this guy's going to have a country accent, something tells me. But he has quite a bit of subscriberage. He's got 121,000. He's got a lot of thumbs downs, though. I probably see why the people that know how to trade probably like, dude, you're kidding, right? These are not just indicator secrets. These are 3 powerful strategies, not only to profit in bull markets, but bear markets, as you can see, the blue and the red. I'm in. Okay, let me have it.
In today's video, I'm going to share with you MACD indicator trading secrets. Okay, this.
Oh, I didn't speed him up. I had to reboot. He speaks fast enough. We can't take him past 1.5 or your brain will just start to leak.
These are the stuff that, I've not seen anyone share on the internet before. Okay, so you're going to be in.
It sounds more authentic, actually, because Asian people do speak like that, very sharp and fast.
For a treat. And no, I'm not going to talk about, how the MACD line cross up, you buy, or it cross down, you sell. Nothing of that sort. In fact, what you'll learn, right, is number 1, how to use the MACD indicator to identify momentum reversal and even predict market turning points. Wow.
Wow.
2, how to use the MACD indicator to help you increase, right, your winning rate. And finally, how you can use the MACD indicator, specifically the MACD histogram, right, to actually identify explosive breakout trades about to occur. Sounds good, right? So here's what I want you to do right now.
Sounds good. Let me get some of my coffee.
So below this video, hit the subscribe button and the thumbs up button, right? So this way you always...
The thumbs up button. Hey, dude, my thumbs are taken off in a mouse accident. I was over clicking on the keyboard.
Be up to date whenever I publish a new video. So take 2 seconds. 1, 2, you done it? Okay.
Oh, God, no, that took too long.
So let's begin. So first thing first, right? If you know, right, I like to always, talk about the indicator itself before talking about how to use it, because if you do not understand how the numbers, the lines are derived from the indicator, it won't make much sense later on. So this is why we always go back to fundamentals. What is a MACD? So MACD indicator has 3 parts.
What is a MACD? It's a 12-day, and these are all based on cycles. You always wonder why they come up with these numbers. It's like half a month, 12 days. 26 is supposed to be, and of course, if you did it on the daily charts, those supposed to be something, or the weekly chart to be half a year. Right, 52, 26, 52 weeks. I mean, a lot of stuff. It's just cornball stuff.
To it, right?
I like how he's using the Williams fractal as his bullet point. That's cute. I think that's the Williams. It's almost like the Williams fractal that comes in MT4.
Let me explain to you.
I'm being triggered. I'm subliminally sucked into his trading plan.
What they are. Number 1 is what we call the MACD line. This line is derived, right, by taking the 12-day moving average.
It's 12-day, and it's not 12-hour, people. So don't even try to run this on a fucking hourly chart.
Founder Gerald Appel, he used the exponential moving average, right? The 12-day exponential moving average minus the 20.
Exponential is a fancy word. I don't think it fucking matters. It could be smooth. It could be simple. It could be linear weighted. It could be smooth. It could be exponential. It could be some fucking delta shit. It could be linear regression. Ain't gonna fucking matter. It's just not gonna matter, man.
26-day exponential moving average. This is where you get the MACD line based on this calculation. The signal line is simply the 9-day.
I like that signal line. Like it calls you up. We're about to cross over now. What you can do is take the MAC to the MAC to the MACD. So where do you stop drilling down? The signal line is the third fucking moving average. I mean, really? How about a fourth? Why not a fifth? It's just so insane.
EMA of the MACD line. So
the histogram is cool. Now the histogram's cool because you can see the time marching by. Each bar is one slice of time in the movie that you're watching. So Alexander Elder will explain a moving average to you in a film. In other words, it's frame by frame, and the person's moving faster, then they're going to be moving through the frame faster. You're just taking snapshots of reality as it unfolds in front of you on a 5-minute chart, on a 1-hour chart, and of course, the guy that is on the 4-hour chart has a completely different trade plan, most likely than the guy that's on the 5-minute chart, and his frequency of trading may be like very low. I just can't see a setup on the 4-hour chart it's going to take you a week to get into a trade. It's a difference between getting a week to get into a trade, and there's plenty of those trades. But you gotta be that trade's not gonna be around for like 8 more days. What are you gonna do in the meantime? What are you gonna do? I guess you could just sit there and I don't even know what people say. Somebody asked me, which of your videos explains your methodology? I mean, not general discussion. So the method, like now, is this indicator a method? Is this going to be, you could build a method around this indicator. You'd still have to have a rule list for all of the patterns that the indicator is displaying. It is deriving all the, the indicator is just like on your dashboard. It's not your engine. It's like a sensor. And it's just filtered out. Okay, if the temperature's too high, the indicator light comes on. There's really no secret to that. There's no secrets in your dashboard. Oh, maybe there is, right? If it starts to do a certain sequence and you pick up a vibe, you get a signal. I'm trading off my indicator on my car, actually. That's my signal service. Hey, oil's overheating. I'm running out of oil. I think I'm just going to put on I usually actually go into an oil stock. I'm using the indicator in the car. It's perfect. I mean, it makes total sense. But you do wonder now, the signal line, the histogram, it is a nice visual because the histogram is giving you this frame by frame, and you got an X and a Y on your chart, and it's giving you that marching in the time. You also can make your data come right in the center of the screen. That way you are thinking about the future while you can see the past. The past does not equal the future. On the MACD indicator, what you're looking at is the effect of price on compressed. It'd be almost like if you were trying to, in music world, if somebody's playing into just an old microphone, like a ribbon microphone or something that's just not really, there's nothing electronic there. And what they're playing goes through like a chorus and a compression and all that stuff. And at the end of that, somebody gave you that, you probably wouldn't be able to tell. Well, I mean, you could hear it. It would sound the same. Kind of. Actually, it's not a good analogy because you're really kind of butchering the data once you, and not to mention everything on this MACD is based on closing prices. So it's almost as if in the music analogy, it'd be like if I just said, I'm only going to record from a very narrow slice of your frequency. So I'm only going to hear you when you dip into this one frequency window. Anything you play outside of that window, I'm just going to notch filter the frequency response in an 80 dB. In other words, it's going to be 0 dB on either side of this one band. Or it's just going to be like being one radio station off from being tuned in. So you're not really hearing the whole piece. And so the indicator is really trying to say, okay, if your car is really, really fucked up, if it's really, really overbought or oversold, then it's time to let's take a look at that. Now we're looking for divergence. Okay, but there's stuff that's happening that this guy's probably not going to tell you. there's a rule for that doesn't include divergence. There's a rule that there's a way to make money from MACD where you're going to say that you're in buy mode because it's, now this would be where you'd build a robot for this, because you're telling it, listen, when the histogram's above that, just keep fucking buying it. And this is where the person or the robot's going to get clobbered, is because there is no mention of true range in MACD. There's no mention of it. It does not include. Now, if you took the MACD, this is if you really were going to use it, you would have an MACD on highs, MACD on lows, MACD on close. And you would plot those probably on a vertical screen, because you wouldn't even be able to see the discrepancies between those things. And you would have maybe a signal line, take into account the ATR, but of course you wouldn't even be able to use 12, 26, 9. You just wouldn't, I mean, and the 12 is almost half of the well, it's like a 30% of that or something. In other words, the spacing, I would say, like, if you did an MACD of, like, even Williams took his to 534.5. So the Bill Williams MACD is supposed to emulate Elliott wave because he's an Elliottician. So he's using 534.5. There's a guy out there using the cloud who doubled the numbers in the cloud. It's not why he's making money. Or it's not even why. It's funny because it's window dressing. Like, if you take cloud trading, you double the numbers and run it. It looks spectacular. It looks like a painting. It doesn't mean you could make any money from that, because actually you probably could if you printed it out on a laser thing and sold it with a 3D code on top, lucite coating on top, and sold it as a piece of artwork for $3,000. But in the trading world, it's just nothing but a mental cushion to make it okay to pull the trigger or not, or place an order. And now this is a very big difference between trading at the market, literally pulling the trigger, and stalking the market, going, oh, they're almost near my entry. Oh, they're almost near my entry. Oh, they're almost. And this, so this is also, nothing in here is about what is in your head as far as how you would behave from Sunday to Sunday or from Friday to Friday. What are you doing all week long to make money trading? Are you putting in orders that may not work out? Well, nobody placed an order if they didn't think it was going to work out, so everybody's going to go and say, well, I have to figure out what's going on here first. Of course, you would probably have to. It is difficult because you have to ask yourself some really strange questions, like, why am I even doing this? Or, okay, so if you go on the internet or read a book on trading, you're going to see probably what a lot of people have already seen is all the classic things. It used to be just bar charts. It used to be just line charts. If you go back and look at price charts from the olden days, there wasn't like a high and low. They're like, dude, whatever. It's the end of the day. Here's the price. Fucking deal with it. And everything was a line chart. Then you got people that were like, okay, we've got the high and low of the day, which is not always accurate. And talk about fake news. Jesus Christ. I mean, people would get these quotes in the paper. You'd be like, really? How can the high be what? And now it's a completely different world. You got like platforms bringing in data. Every broker has a slightly different price, technically speaking. I mean, if you really want to get technical, that's technical. You got like 5 brokers. You're looking at them all at the same time on 5 screens. You got a bunch of guys on crack pulling the trigger on 40 standard lots. Look at it. We just fucking scalped we just arbitraged that thing in 5 milliseconds. All right, you can do that. I could do it, and I could do that in one morning with 40 standard lots. I'm looking at the other broker. I'm like, pull the trigger. Okay, let's say, oh, we just made $300. Boom. But you have to really get a 40 standard lots on one ticket. I was trading standard lots and making money, and then I went to 2 standard lots on Friday. Okay, but you're down fucking 20 grand. You got 100 grand in the account. Now you're down 20 grand. You started with 10 grand. Now that account's been to 170 grand. I could have just cashed out, gone flat, thrown in limits on a bunch of currencies like a pig. There's no fucking way I'm gonna blow that account up. I could put in, I get 150 grand, 170 grand from 10 grand, come back with standard lots and pepper them 100 pips apart on 5 currency pairs. I probably wouldn't get filled on some of those tickets. What is my risk? And then I could live off the account, right, for the next 6 months till I can decide what to do. Now, trading's just not like a normal job. Like it is if you're going to scalp every morning and you're going to trade. You could make it a job. You could try to, I guess this is the problem. You could try to fit that into a job and say, I'm going to get up in the morning. And people have said this to me. I'm just going to check the market every morning. Okay, but it's that presupposes that you have a kind of a expectation that you'll make money because you showed up to work, but you may not. They may not fill your ticket, or you got in too early. That you've either gotten in too early because you got in at the market, and here's where the big fork in the road is. Is coming to work and pressing a button just because that's a typical job, right? You're taking an action to make money, but this is the only business I can think of is where if you don't do something, that's what you're supposed to do. I mean, you can go back test stuff. You can go. It's just an awkward thing. Now, since I decided to trade on limits more than at the market, and it's a real difficult mental thing because I really want to be in something, even if it's a small position. So I just take care of that by just getting into a small. That's my method. I guess if I had to explain it. My method is to overcome my psychological damage that I've either had in trading or in life, of anything else. I'm still thinking about. So you may think about a trade you did that was really absolutely retarded, and you're like, I'll never do that again. Of course, it may not be that you did a bad trade. You're just in too big of a size, and you could have also gotten out too early, which would be considered a bad trade. So, once you start to go down this road of what is good and what is bad, but it's not like a regular job in the sense that, well, it's like owning a business. See, it's not like going to work for somebody. If you go to work for somebody and they have work for you to do, you would do it, right? And they may be actually asking, if you live in Japan, they're like, dude, if you go home early, we're going to fire you. I mean, they're so dedicated, And this is why the Asians kick the Americans' ass, because they're very dedicated people. They're all in. And so this guy's all in here on this MACD. But no, it's a big long discussion. This guy asked me, and I asked him if he could do a hang up because it doesn't. If I were to say, somebody says, well, how do you build a car? Some people are going to actually draw a fantasy car, and then they're going to find out the practical way to design that car so that it can actually drive down the road legally. Because maybe your design that you came up with, it's not high enough. In other words, it doesn't qualify as a real car. It's too low profile, like you're laying down. It's like the luge car. And so what's the point, right? And if you're the kind of, if that's what you're going to do, you're going to scrap that idea right out the bat. So you're going to typically, this would be the preferred method of trading. Of course, it's different for everybody. Because some people just like a gamer would want to just see, I just want to, like my tequila buddy, he just loves the idea that he's gambling. He's all excited because it's like a carnival. And when the FXCM platform would come up in default mode back in the day, almost 10 years ago now, It would come up with every fucking one-click button ready to go with a stop, though. I'll give them that. The platform, it was its own platform. It wasn't MT4. If you pulled the trigger, you could pick a stop and a take profit and lock that in before you pull the trigger. And he said, "Look at all these flashing lights." So we'd watch this thing right in Asia, and he was just amazed, like, what's going on? Like, look at all these. Oh my God, look at this. It was like a circus for him, and he was quite content. Even if he lost money, he didn't give a fuck. He had enough money to blow in these markets. He was losing about $400 a day or something, or making 800. He would make $800, lose 400. It was cracking me up. So he, I didn't think he was going to be. He didn't have. I don't think he could psychologically handle trading, because it was really it just tore his brain apart. I think markets are just not. And if you start to look at this MACD shit, this is when the volatility of the market. There's no sense that it's even going to. Well, I guess if the MACD quiets down, but I said so laggy that by the time I don't even know. I mean, there's no thing to save you from volatility. All of a sudden, the markets just went nuts. And it wouldn't take much, right? These are over-the-counter markets. Anything can happen, and it can happen very brutally. I mean, this Swiss franc thing, they could come out tomorrow and go, you know what? The dollar's starting to kill the Swiss franc. Fuck them. We're going to raise our interest rates. And you could just see the Swiss franc go launching through that vacuum on the north side, just push. People be like, what the fuck was that? Yeah, that's what they're going to say. What the fuck? It's just like Bitcoin could go rocketing up to $6,000. It could go rocketing down to 2,000. People are going to, yep, that's just how life is. I mean, it's just like you're driving your car and some idiot hits you. Somebody's just sleeping at the wheel, or they're texting, or it's incredible that people can drive a car. I used to trade while driving, so I shouldn't talk, but I was an MT4 on an HTC phone back in the heyday of Forex, before the government decided to outlaw it, basically. It's so funny, all the constraints. But here's the MACD presentation. I don't want to get off topic here. But this is the secrets, I mean, it's someday I want some guy to say, here is the unsecrets of MACD indicator. This is what you lucky you don't know.
9-day EMA of this MACD line. And finally, the MACD histogram is where you just take the MACD line minus the signal line. So if the MACD line, let's call it X, signal line, call it Y. So this is the, let's call this P, right? The MACD histogram is going to be P.
I may have to fast forward.
Okay, so these are the math behind it. And if it sounds confusing, don't worry, because I'm going to illustrate it with the charts right now, so everything will be crystal clear. So over here, you can see that this is the MACD indicator. Okay, so I'm going to just walk you.
Now, just in case anybody knows what the MACD is, I'm going to show you how to use it with the same signals as the RSI. As far as trend continuation entry, not waiting for divergence. So if you're looking for the more overbought at a lower price entry, it's going to look like this on here. So you see the histograms come up here a little higher than it is here, and the price is lower. That's like your trend. And you'll get, sometimes you get divergence before that. So this is like the divergence. It's so faint. He needs to stretch this MACD to here so he can see all the stuff in there. Or you just keep on taking. So you need a trade plan for this thing. As soon as MACD starts, if you had to tell the robot, as soon as it starts to get above the zero line, and I would just ignore, I would just trade the histogram. I wouldn't trade the this shit, because he's going to say there's divergence here that made this thing go. But dude, you still need a trade plan. What is he on here? What time frame is that? He's on, I can't see. Daily chart. Goldman Sachs. Okay, he's on some stock trading, daily stocks. For a stop entry guy, a confirmation entry guy, as soon as histogram pops its head above the zero line, you're running sell stops. Okay, there's one methodology. There's not one methodology for trading. It's really what you feel comfortable doing, because some people are going to see this inverted hammer here. I don't know if you can see that. I have to zoom in on his thing. So we have two dojis here into the moving average. Some people are going to say, well, I got him because of that. But some people are going, so if you trade at the market, you are going to nail the trade on these. You got to get in on a doji. If you trade at the market, enter on a doji because you have the lowest risk entry. You can run the tightest stops on a doji, right? Tight stops, tight stops, tight. You don't want to get, okay, so that's actually, if you're going to run tight stops, you need to get in a doji. If you're going to trade at the market, you need to pull the trigger at the end of the day. So on this big up candle, you need to sell that. Hopefully you got filled on limits up in this trap, but you need to sell that at the market. That's my methodology. That should be anybody's methodology that trades at the market. If you trade at the market, what time is it? If you're going to get in on a doji with a tight stop, you can run very tight stops on a doji. Okay? I hope everybody knows what doji is. It just opened and closed and nothing happened that whole hour. All it is you have a small open to close. There's 4 pieces of data here. That's plenty of data per day. 2 dojis, something's going on. This is probably a weekly doji. Oh my gosh, it's coming back to the structure. Now, the structure is a building structure view, vertical view of price history. Right? It's like where have we been? Where could we go because of where we've been? And you can make a ton of money by placing your orders in the unfilled, to be filled areas. Or are you going to trade based on end of the day data here or end of the hour data? But the problem is, end of the hour, there's 24 hours in a day. Now you're going to blow your brains out. Maybe there's too many setups. Maybe there's too many opportunities. And you're like, well, and if you're greedy, you would go to the 30-second chart and look at all these trades on the 30-second chart. I mean, it's twice as many trades as the 1-minute chart. You can see any robot that you turn on and have it trade the 5-minute chart. It's going to trade its ass off and blow up if it's set to some ridiculous take profit and stop zone and the spread's too wide. And, you just can't you can't slice it that thin. It just, even if you go to the store and they say, how thin would you slice it? If you slice it so thin, you just are going to end up not even be able to get a slice out of that thing, right? You're just going to shave it and probably just demoisturize it. So, and this is the daily chart, for God's sakes. Who has the patience for this shit? I would just go for the pure histogram. So really, and that's smoothed out. The MACD settings I would use would be like, if you wanted to use 1, 10, 1, 1, 10, 1, or 1, 5, 1. It's as tight as you can get it. I don't say it's a crutch to have MACD on there. It's kind of a, like, here, what's the question here? We're up. Start selling. Hopefully you sold here at the end of the day, and hopefully you got filled here on some kind of limits. That now, how tight did you put in the limits? Well, that's a whole nother issue. How big is each ticket? How many did you put in? Okay, this is where the devil's in the details. Like I said, I don't know what time frame. People say, what is your methodology? It's the same on it's the same. There's only 3 ways to get in the market. I could write a 2-page book on trading. Now you can call these tickets decisions. We'll just call the ticket a decision. A decision of risk. How many decisions of risk per day, per week. How many bullets do you have? Each bullet costs, let's say, $50 to launch each bullet you're going to shoot at the market because you're going to pull the trigger, right? That's the classic thought is, I used to hear, you're afraid to pull the trigger? That means, are you afraid to get into the market on a hunch or maybe on some indicator like this? It's telling you, okay, sell. Look at, we're above. Here's where you're selling above and you're getting killed. What do you do about that? Well, if you would have waited long enough, look, you would have made money. So shut the fuck up. I mean, see, the big problem is you have to have an approach. You have to know that there's three types of entry techniques. So you are going to have to figure out what you're going to do about each technique, because you got to use something to get in these markets. You've got your money. You've got to use some kind of entry tactic, methodology, strategy, some way to get into a trade that also, are you going to buy or are you going to sell? So the question is, should I buy or should I sell? Because you're not going to make money unless you're picking the right direction. But what if the moment you buy, it doesn't go up immediately? Well, if you take the classic approach to trading that people talk about, well, if you're losing, cut your losses and get out. Well, you would never make any money. You have to be able to lose to win. And that sounds corny too, but you've got to be able to be underwater on your house. You buy your house. So think of it as fixing a house up. Standard lot. You buy a standard lot. You can buy a house for $100,000. You have no stop. And you're down, let's say you're down $180. Now you're down $390. You only got $1,000 in your account. You're in a standard lot. One standard lot. So you have to be able to psychologically deal with that kind of exposure to losing $1,000. I just say $1,000 is, you should be able to make money with $1,000. You should be able to make it to $2,000 in a month. You should be able to. You may not be able to for just a pile of reasons. And one of them would be, and it just sounds so inverted, and it really doesn't make sense to say that you have to make it okay to lose the $1,000, because otherwise you're going to cut your losses and get out. And if you keep doing that, you're just going to be a death of 1,000 cuts. I get into a trade, it goes against me, I get out because, I got to cut my losses short. Think of that fucking logic. That's the only reason I agree with this Michael Norman guy, this fundamentalist, this MMT guy, whatever the fuck, is money market fundamentals. Yeah, fundamentals eventually are going to queue up to reality, but I don't even know. It's, you really got to, so that's the first thing. If you're going to just only trade at the market and you're not, and you don't have to trade without stops, but if you say, I'm going to trade with a $200 stop at the market, at some point it would occur to you that if you trade too big, you're going to have to run a tighter stop, a 20 pip stop on a standard lot, $200. And the broker's going to let you now trade for the first time in history. I think this is why a lot of people got into it, because I did, because I could take $1,000 and diffuse the risk, so I can smooth out my risk with $1,000. I mean, with a micro account where you can trade $1,000 position. Sorry, there's $1,000 in the account, and you can trade a micro lot. And I'm like, you mean to tell me? And they're like, yeah. I'm like, oh my God. Now you can't, that amount of leverage on a very small position gives you a flamethrower as far as making decisions that don't really have any, I guess they could have psychological impact when you're on the wrong side of the market, but you're only losing like $40 as opposed to 400. Or you're losing $4 as opposed to 400. There's a big difference. If each decision you make, and each ticket is a decision in a way, if you make a bunch of decisions every day, I don't know how many you make, but most people have a routine when they wake up in the morning that they don't have to make a lot of decisions. They've laid out everything in the room, and they're good to go. And they just get up, the thing's right there because it's convenient. Everything's about convenience, right? It's right around you. You don't want to go all the way down to the hall every morning to get something you use all the time. So, also the trade execution of, so you don't want to make this, if you have all those decisions that you kind of just don't really have to make because you've been, then they don't have the big weight. And a lot of people aren't fretting about, I guess people would, I forgot to feed the dog this morning or something, that they're like, oh man, that's another one of those detailed decisions that everything's a decision. Every action has some type of direction to it. I mean, you're going out the front door as opposed to the back door. And it's hard to fuck that up. But in trading, the problem is that you're making a decision in a world where there is it's just pure chaos. I mean, there is no fucking rhyme or reason. You really could try to attach one to it and say, oh, it's here because of that, and there's, the price is falling into a hole, or the news came out, or can't you see that there's, that it just won't stop going, so it just won't stop going. It just keeps going in one direction. Where we see markets that just keep going. You're like, oh my God, this isn't like how much longer? And you can count 40 4-hour candles on currencies. I could show you charts where 44-hour candles on the yen down. And you're like, is that even possible? Yeah. So that the MACD is just going to be like, you better go down to the 1-hour chart and find a place to get in. Now, if that presupposing you know how to even trade this indicator, what decisions do you even make based on MACD? And getting the sizing right, and how many trades you do, how many currencies do you trade. And it's just so insanely complicated. And of course, if you decide to trade another currency, there's another decision you just made. Are you going to be right about that? Oh, I shouldn't trade that currency pair. A lot of people say, I can't trade that dollar CAD. It's just fucking me over. Yeah, because it's such a goddamn ranging market that you're trying to trend trade. Most people aren't trying to trend trade. And the vicious spread of dollar CAD, and at least the vicious wick, if you have a stop in there, even if you don't, they're going to blow up your account. Because you're in with leverage, hopefully, because you don't want to buy a $100,000 house, but you don't mind putting $100 down. I'll give you $1,000 down on a $100,000 house, and hopefully you can flip that house by the end of the week. So that's what you're truly trying to do in this trading. But the question is, did you put a bid in on that house, or just go around and buy it? Like, that's how I shop on eBay, actually, is buy it now. Because I'll tell you what, I really just want this thing. I'm not bidding on something. I really don't like that feeling, and that's another big fork in the road, is that if I put a bid in on something and I really want it, I don't want to get my hopes up for something that's not going to happen. It happened to me when I was a kid. I had pneumonia, and my mom says, well, you want a toy? She goes, you can have any toy you want. So I'm like, oh, I want this truck that was remote control with a wire. If you can imagine this, you had to keep the wire. It was a very short wire, but the truck, it was a real like diesel dump truck made in the States, I think. Before we farmed that out, and I was like, waited for this thing to come. By the time it came, I wasn't sick. I had to go back to school, and I'm like, I don't even want this fucking thing. What the fuck is this? So I was already impatient. So I think this is just locked in my brain. Don't think I'm going to be able to trade like an Android. So there's got to be a workaround for that. And of course, the pending order is the workaround, because now it's like, well, let them come to me. Like, let them, I can get a baby dump truck at the store, a cheap one for now. And then when the high-end dump truck comes, I would always do that. And whenever I bought anything really big, ticket item, I'd buy the get her done version at the store so I could rehearse with the thing. So when I got the real thing, I'd be like, okay, I'm good to go. Like if I ordered a high-end guitar, I'd go buy a cheap guitar. If I'd never played guitar, I'd buy a cheap one. Or let's say I was going to play bass guitar, I'd buy a cheap. If I'm going to switch instruments, I'd buy a cheap one and be like, okay, this is the one to just smash around. The other one's going to be the one to grow into. And I'm looking ahead. I'm looking down the road. Because you have to have something. Now, maybe it's enough to open an account, put money in there, and read all the books and study, but there's nothing that's going to save you from the agony or ecstasy of being at risk. Now, being at risk is ecstasy for some people. I know it is for me, because I know there's going to be no reward in life unless I take a risk. So every time I go somewhere, say I'm going to go to the store to get something to eat, or I'm going to go to a restaurant, I'm taking a risk that the waitress might be ugly. You know, there's all sorts of, it's like, oh man, is it going to be another one? Come on, or they're going to sit me over by, see, you just like, oh boy, you take a risk. So it's really like all the decisions you would make trading seem to be, people seem to think they can be more scientific about it. So I'm going to use MACD, and this is going to kind of make these decisions not so harebrained. And I don't know how people get around the fact that, I don't hear a lot of people talk about it, but I got to imagine this, if I'm thinking this, maybe somebody else is thinking this, is that if you got into any trade that was winning, you would probably, if you had any amount of greed, which you'd have to have if you were even trading in the first place, you could try to make money. Like, you know, greed's a good thing. What can you say? I mean, that's the only impetus is getting you up, and the more you trade it, that you're going to wish you were in a bigger trade. Because you're like, I'm right about this trade. I really should have. And actually, some of the trades you get into that you're thinking, oh, if you've ever kind of in, as you get used to all the drama in the market, you know, like your checklist, you know, that people give you, you'll find that, oh gosh, if I would have not, this is where you kind of trade the failure pattern, you know. I would have not traded that the way that it was told to in the book. And you actually are like, wow, I was afraid to take that trade. And this is like the best trade I've ever been in. And then you try to read that fear level and say, God, maybe I can read my, like if I'm afraid of it, maybe it's good. Like this is the mind games that people go through, because there is no book. There's no method. There is no one method, because it has to fit your comfort level. There's no way that you're going to buy a three-wheel car. You know, these three-wheel cars will probably be coming out soon. I don't know. I mean, you know, I've seen the three-wheel car. It's like a motorcycle with two wheels. But it's like, okay, is that stable enough for you? Or do you like the fact that it handles like a fucking a Nazi, you know, motorcycle? What is the... And so I've talked to people, and they've asked me, hey, what? And they say, I could never trade the way you trade. I'm like, yeah, I doubt anybody could trade the way anybody else trades. That's a huge problem, because nobody's going to, I guess people have sex pretty much the same, but everybody's going to have pretty much, is it 60 beats per minute? What is the rate of sex? It's like a hit song. What are these numbers, you know? And everybody's kind of I noticed that the days are getting longer, I think. The sun's setting later. I noticed that today I've lived long enough, I think I can tell you what month I'm in. It's kind of scary. You just have a sense about where the sun's at in the sky, and you're like, okay, this would be right. This looks like, oh, and then you can see different sunsets look different times of the year, and different places of the planet. That's why you can tell the Earth's round, is because the sunset looks different in different places. because the angle and all that stuff. And the decisions you make as a trader have a lot less weight if you trade small. But then, of course, the greed comes in and you're like, yeah, but I'm just not even big enough on this trade. But if you've gone to the Empowered Trading School, they'd say, don't worry about it, son. You've made a good decision. That's a good trade. And any trade, it's like any plane ride you can walk away from is a good plane ride, right? And this is that mentality taken into trading. And it is true, right? In other words, to get the act of trading and execution, to pull the trigger, to place the limit or place the stop, you're either getting a stop entry, and you could also get out of the market. And the way out of the trade is the same problem. Are you getting out on a stop or a limit? Did they hit your target, or did they stop you out? Or did you just say, fuck it, I'm getting out of the market. This thing's not even going to hit my target. So you have more problems than you think in trading. You got 3 ways to get in and 3 ways to get out. Well, just because you got in doesn't mean, or you're going to blow up the account, right? You don't have to worry about exiting. If you never got out of the trade, at some point you got to get out of the fucking thing. Even if they didn't, you just got to say, oh man. Yeah, now this is where there's no fucking book that talks about. I'm assuming people are using MACD to get into trades, not to get out of them. But if they are getting out of them, somebody said in the comments, which, yeah, this is the natural. Somebody said, they mentioned the fact that it is like, okay, that's great. Now, does that mean I stop and reverse and go the other way? Do I literally take buy and sell signals? I'm all in and I'm actually reversing. Well, it would be very, very, you'd only could do it on one instrument. You'd have to have multiple time frames running. There's times when you'd have to be flat because it just doesn't even justify getting in when the market is completely, you have to, you just can't trade every minute of every day. There's no fucking trade there. Now, there's a trade at all times in a deeper price area. There is a trade that's about to happen. Maybe it's 100 pips below you or 100 pips above you. And it just hasn't, you're just not there yet. And a lot of people have this big, long, elaborate, it's mind-blowing. I've been studying this for 10 years now. And on YouTube, I've watched more Forex videos than you can. I'm just too fascinated, curious about how other people perceive reality and the prices and the cloud trading. And this guy doesn't have too many things on his chart here, but I think he's just trying to show you how to run. But it's so it's going to come down to, you're going to ask yourself, what should I do? There is nothing anybody can tell you, because it just be like, if you consider it to, how are you going to make babies, right? You're going to get married typically. I don't know. You don't have to get married to make a baby, but say you wanted to have kids, right? And so are you just going to, how are you going to pick somebody out? Good decision. Okay, that's one big giant decision. But then, how's that going to work out? And should you go read a book before you even try that? Well, a lot of people don't, I think actually people would probably be better at trading if they just started trading. And I talked to a guy that he was like, oh, one of my friends traded and I just picked up what he was doing and I'm trading now, making money. Now, if your personality, if you could take the route and you go like, I'm going to watch about 20 videos on YouTube. I'm going to study real hard. I've talked to these people. I'm going to study real hard, man. I'm learning everything about what that country does and what the girls look like over in Australia before I trade the Australian dollar, because I'm even not sure if I want to be involved in that. And I'm going to study real hard. And I get it, who doesn't want to, but you don't have to know the compression ratio of your car to drive it to the store to get food. So are you going to grab a turnkey system? I read one. You could be the guy that read one book and says, yeah, that's what I'm just doing. MACD crossover. I get a stop entry. I risk 2% of my account. I'm okay with that. And I'm kind of making money. I just, it's like, I don't even know. Maybe that guy's, he's got a $100,000 account. He's making $10,000 a year. He's losing 20 grand. He's making 30 grand. I mean, what is the fucking number? And that's another thing. What is the? Are you looking at 20 years of trading? Are you looking at 20 hours of trading? Like, what? Are you like a high performance trader? Every day I make something or I do something or the market's just dead. Like nobody's making money. Nobody. Unless you're writing options. But then you end up like the guy that has to apologize on the interwebs. You know, the rogue wave hits the guy that the market's so quiet, and all of a sudden, I think they call it the calm before the storm. Somebody should have told him about the calm before the storm because it's real. The lack of volatility is as scary as volatility because you know something's going to give. Something's got to give. Okay, I'm going to go back to this guy. Sorry for the sidetrack there, but I try to fill in the blank here. I was just going to do a quick video about this guy, and I can't resist just rambling on about the... and I would play Zeppelin and ramble on in the background. Of course, everything with all this copyright stuff. I don't think this guy's going to hunt me down for some reason. It's funny. I mean, unless he gets word of this. But if I call it indicator secrets, maybe somebody's going, oh, how dare you? And then we got the comments to go too on this one, which is going to be pretty funny. I'm going to let this guy continue with his spiel. I will interrupt probably again.
You through what they are. The orange line here is the signal line. The blue line over here is the MACD line. And this red thing you see and this blue greenish thing that you see, it's called the MACD histogram. So let's understand how all this indicator goes up and down. If you recall, the MACD line, what's the formula? Well, it's just the 12-day EMA minus the 26-day EMA. So if you want to see, just pull out the indicator. I've got the 12-day EMA and the 26-day EMA over here, which is shown by this red line, 12 EMA, and this blue line is the 26-day EMA. So right now, the value of this, right, I can tell you is about this.
See, he's kind of overcomplicated it, because really, if you just took trades in this window between the moving averages, this is the obvious entry window as we come up into this envelope between the 12 and the 26. The problem is that whole trading plan fails here. If you try to write a robot that gets in on that envelope, here he gets crushed. So you don't even have to back test this to see the amount of decisions this guy's going to have to make before he puts on a trade. These are all these micro decisions. It's just incredible. I don't even know what people think they're. I mean, it's just so crazy, isn't it? The all these indicators people have.
Blue line is the MACD line. The value right now is about minus 2.6. All right, let me just redo this. The MACD line value right now is about minus 2.6. How did I get that? Very simple. If you just take the red line over here, find out what is this value, the latest value. Okay, this value minus this value, the blue one, the latest value. This, right? Let's call this X. X minus this one, let's call it Y. It's going to give you negative 2.6. Basically, the difference between this red line and blue line gives you negative 2.6, which is the MACD line that you see over here, this blue line. Okay? That's how we get the MACD line. What about the signal line? Well, signal line is quite straightforward, right? Recall the signal.
I hope you're ready for this. I sped them up. I can get them up to 2 speed. I can learn to listen to. This is like the Evelyn Wood sped reading course.
Signal line is simply the 9-day EMA of the MACD line. So to put it simply, right, it's just simply the...
To put it simply.
Average of the 9 values of the MACD line. So let's say, for example, the MACD line has a value of, which is this blue line. It has a historical value of, let's say, 5, 10, 20.
Historical value.
13, 14, 15. How many numbers? 1, 2, 3, 4, 5, 6. Right? Call it another one, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8. One more number. Okay. So right now we got 10 numbers, right? 5, 10, 20, 13, 14, 15, 7, 8, and 10. So what you'll do is you calculate let's imagine that all these numbers is actually this MACD line over here, the blue line. Okay? You add all of this up and you divide by 9. Divide by 9. Right? And the answer, right? Let's say the answer is X, right? Will be your value of your signal line. Because the signal line is just simply the 9-period moving average of your MACD line.
I'm glad I sped it up.
Simple as it is, right? So that's how you get the orange line. And finally, how do you get the histogram? Okay, so the histogram is, if you recall again, let's go back to the...
I can't take it.
Let's go back. And what you'll get is the value of this histogram over here. Titan, this is where you notice the histogram. Let's talk about how you actually measure momentum and identify reversal in the markets. So just to share with you briefly, right? Let's say whenever you're trading support resistance, right? Markets, in a range.
Okay.
And you know that you want to sell at resistance.
Yeah.
And I'm not sure if you've heard of me say it before, but whenever the price is at resistance, right, it doesn't...
I can tell you right now the trade. You're going to want to buy here, sell here, buy, sell. It's very easy. Buy, sell. Next question. Right?
mean you go short immediately. Instead, you want to see how the price approaches resistance. What for me personally, I like to see a very strong, bold, and clean move coming into resistance. I like to see strong momentum coming into resistance, right? Where you see large body candles. Why is that?
Okay, so this is the problem. What you like does not matter. What you like is your enemy, your comfort level. You have to trade against your trading's counterintuitive. You really have to go against what you think you should do. Trading is so perverse. I can't believe they haven't banned these videos on YouTube.
It's simple, right? When you get a strong move up higher, right, the reversal can be just as swift, right, quickly towards the downside. Okay? What you don't want to see is that, for example, this is the range, right? Market comes up, then it slowly chops its way up, right? Hover around resistance. This type of price action, I don't want to short the resistance, right? Because it shows you that there is sign of strength, right? Market making a series of higher highs and higher lows. These are the type of setups that I don't want to short resistance. I want to see strong, bold, and clean move, right, coming into resistance.
Okay, that is ridiculous. If anybody's ever watched the market, anything could happen. I've seen it go like this hard and come whipping back. I've seen it drift up, creep up, and come back. I've seen it drift up, blow out. It's complete. What he's saying is what he wants to see. It's what he wants to. It's really not what you should be thinking. You should be thinking anything can happen, literally.
So now the question is, how do you define this strong momentum move? This is where the MACD, right, comes into play.
Still no mention of how many trades per day, how much risk per trade, and how many instruments, how many accounts, how big is each trade.
So number one, you want to move into market structure like support, resistance, trend line, etc. Number two, you want a MACD histogram to show.
Okay, so you want to move into market structure. Okay, so like the top or the bottom, like support, resistance, trend line. MACD histogram shows a strong momentum. Well, this is his checklist.
Show you strong momentum, right? Show you that there's an imbalance of buying or selling pressure. And then number three, you can just look for a price rejection, right, as an entry trigger.
So people always have this one that kills me. Well, we see this confirmation price rejection, therefore that validates the pattern. Let's go in, guys. Okay, anybody ever blow up their fucking account on that dumb shit? I have.
Let me explain with you, right, with the charts, right, obviously. If not, it's quite hard to visualize.
It's completely harebrained bullshit.
What I'm saying. Okay, so first thing first, let's have a look at the pound New Zealand. So you can see over here, now we don't need this 12 and 26, we remove it, right? You can see that over here, this is what I'm talking about.
Aren't you glad I sped them up? I want to go for a 2x. I can't take it. I'm starting to almost get my brain around 2x with this guy, which is blistering fast.
Note this. Over here is an area of support, right? You have a market coming into this area of support.
I got it. I see what you're saying. Now, I noticed this other stuff just jumps out at me. Top becomes double bottom here. It's always so easy to see structure. It's the easiest thing to see is structure, I think. If you were to even forget indicators, you could just make money from structure.
How do I know that it's a strong momentum move? Pay attention to the MACD histogram. Right? When you see the MACD histogram showing a strong bearish momentum, right, where the histogram, the bar is getting larger and larger, it's telling you that there is strong momentum in this market. And whenever you see strong momentum coming to support, it's where you want to fake the move. It's where you want to go counter against the dominant move lower. Right? This might sound counterintuitive, right? But the market, right, is more likely than not to reverse higher after making such a strong decline, right? But there's no guarantee. So this is where you can use, basic candlestick patterns like hammer, bullish engulfing, or price rejection patterns, right, to sort of confirm that the market is about to
confirm. A hammer pattern to confirm. It's the same. Everybody's talking about this. This is the classic bullshit checklist that people have. He still hasn't got to how much these trades cost me, the pain, the true cost. Like any girl that you would see, you would figure she's going to cost money. Okay, this is going to be expensive. This girl, look at this thing, look at this hot mess.
Reverse higher, and in this case, you got somewhat of a bullish reversal pattern, right, signaling that the market could possibly hit higher from here. Okay, so.
Could possibly see. Here's the classic thing that it's hard to believe that if you miss this move, you had a chance to re-enter on this area. Here's your doji entries. Here's the dojis. Here's a doji before the collapse. And what's really going on is we're filling this void now. This void's been filled. Right? We filled this hole. We never made it to here. The market's leaving a trail of dysfunction.
So this is what you want to see, right? A move into support. Strong bearish momentum, right? You don't want to see weak bearish momentum. You want to see strong bearish momentum.
Oh, strong, man. Oh, like Jesse. Oops, I actually turned off his. I hit the wrong button. Please hold. I gotta be careful. He's so fucking loud.
This tells you that whenever there's a strong move lower, the market will
YouTube's so loud. Please hold.
just swiftly reverse back towards the upside. So this MACD histogram is a sign to tell you right that there's a strong momentum
It's a
move
sign.
forward. Let's look at another example. Okay.
Like reading tea leaves. Another example. Please hold. So here's I'm going to show you the entries based on more overbought the RSI theory from Andrew Cardwell, taken in an MACD histogram. If you notice, this is more oversold here than it was here, and this is a buy plus you have the structure, and then more oversold again than here, faintly, and you take the highest close. You didn't quite make the target. This is more overbought than this. That's a lower price. Jeez. I don't really see anything else on here. Okay. Go back to your rant.
Pound yen. So again, right? Over here, market coming into an area of resistance. Right?
The guppy. Insane. Here's a reversal in MACD histogram. More overbought, lower price. Now here's where you see this. This is a more oversold, higher price. Dips down. And so if you would have tightened up the MACD and go for shorter periods, you see more dramatic, just like a 3-period RSI. I still haven't seen him call out the reversals, why it should reverse. It's just harebrained. It's just so silly.
Right, this resistance that I've drawn over here. Notice, right, strong bullish momentum. Right, looking at the MACD histogram is getting higher and higher over here. Strong bullish momentum. This is what you want, right? Strong momentum into markets.
Strong momentum. You missed the fucking. This is what kills me, dude. You missed the entry here, and there was no divergence from MACD. There's no divergence from the histogram. This bottom here is pure auction theory. You go down here into the where you have never boldly go where no price has ever gone before. You melt down in hard. The volatility drops. You come back into the floor. The sellers come in, kind of over. Well, actually, the sellers come in at the last known bottom. They pull it back, and this is the big pivot. Of course, we got to take this out, and he's going to tell me it's strong. Let's get in this. You missed the entry. This would be your more oversold, a higher price right there. Kind of your RSI entry. It's so silly. He's being silly.
Structure. And then you can use a tool like, again, candlestick patterns, bearish engulfing shooting star to time your entry. In this case, you got this one over here, okay? And then the market hover a while at this level before you came.
A shooting star. I prefer a doji, dragonfly, shooting star, and then I see that, and then I'm in. And I get in at a stop. Just to make sure, extra confirmation. I don't want to get any bad trades going in my account, please. Look at this beautiful trap up here. Classic big giant window. We dip into it. Oh well. And we got to backfill into this hole. The first scalp comes back to here. Then we start every time we dip in. There's a reversal trade there. I think he's still on the. Wait, he's on the daily chart still. I can't even see what platform he's on. I don't know. Looks like an hourly chart to me. It's 24-hour market, so you can trade the 1-hour chart. There's plenty of trades on the 1-hour chart, I think.
Down lower. But the key takeaway against market structure with strong bullish momentum right before you look for a short setup. Let's have a look at one more example to nail home this point. So
we're on a point. What is it? Can't this guy call out? Nobody calls out trades. I never see a guy say, you know what? Well, see the trade here?
again, this one. Let's see. Okay, this one over here. Notice, right? Market structure, resistance, strong bullish momentum coming in, right? So if you get, let's say, a bearish reversal candlestick pattern, this is the type of move, right, that you want to be shorting because there's strong momentum coming into a level.
Oh, he wants to short it. Sorry.
So you can see that over here, right? You did get somewhat of a price rejection right before the market consolidated, and then it breaks out higher. So you might get stopped out, or it's a small win, depending.
You might get stopped out. Yeah, I think this was a good scalp here. You come up into the weeds, the wicks, the weeds here. sellers come in, they pull it back to this area, never comes back to here. We have all our people that are trading and creating a market within the market, really. So this is a market, just like this is like true exchange. It's wicking up. The longer it trades sideways, the more chance there is for it to go either this way or that way. Sideways here, trap below where everybody makes their money. Never makes it back to here, but notice when it gets back to here that there is that point at which people do cash out. It goes sideways, roaring up. It's still cleaning this area, right? It's still cleaning that. I guess we're stuck with candlesticks. Everybody's using them. Got to know how to read candlestick charts.
How you manage the trade, but I hope you understand this concept that I'm trying to bring across, right? So let's move on, right? So again, move into market structure. MACD histogram shows strong momentum, and then you look for a price projection, right, in the form of candlestick patterns.
Is he done yet?
Hammer showing star, etc. Number 2, trend filter. Okay, before we talk about trend filter, right, I want to go back to the
trend filter. That's what we were just looking at, weren't we?
Yeah, momentum one again. So this one over here, right, it's actually a strong signal, right? So you know that whenever you see a strong momentum move lower, like for example in this example, right, strong momentum move lower, right, you know that the market, right, is more likely, right, to actually reverse. So this is a strong signal to tell you not to short the markets. I know it can be tempting, right? Wow, look at this,
Yeah, I feel a little late in shorting it there, but then again, there have people that have made money as it goes down and rapes this area because maybe it is going to go through the floor here. And depending on how big you're in, we don't know. He's making a lot of it's got to do this. I assume this guy trades. He could make money, and maybe he's. You never know what people's motivations are. I mean, I'm blabbing on here. I'm not selling anything, but I have a need to inform people. I feel like it's my citizen. I want to be a good citizen. I want to be a good citizen and just report, if you see something, say something. Forex terrorist. I'm trying to help out the public at large.
Strong.
It's for the greater good. It's a socialist endeavor.
Candle, right? Market, heading down strongly, it's going to break lower. But this, I know it sounds counterintuitive, but whenever you see strong momentum into a key level, you don't want to be shorting it because the so-called the meat of the move, right, is probably over, right? It's too late to enter. So this
key level
would help you filter, right, breakout trades. Don't chase breakout. Don't trade breakouts, right, when there is strong momentum on your MACD histogram, because by the time this MACD histogram shows you strong momentum, the breakout would have already moved very far in your favor, and it's going to not going to be favorable trading breakouts because number one, market has already moved so much. If you enter right now, you might get stopped up on the retracement or the pullback. If you don't, right, that means you have a very wide stop loss. Chances are your stop loss might be above this high, very large stop loss, which actually reduces.
So if you have a very wide stop loss, I mean, this is really the crux of it, because if you're okay with not being up on the trade right out of the gate, the moment you get filled or the moment you pull the trigger, if you're okay being underwater, being in a loss, owning a house that you can't flip until the market comes to you. So my uncle did that. He had a place that he bought in the ghetto. And he goes, this is a great place. And then guess what? Everybody else realized it. And then he just sold it and goes, I'm out. He didn't even have to fix the building up. So, and you might be the guy that just says, that's such a great scalp there. I'm not going to hold this and ride it out. And you're scalping, right? If you're going to flip a house in 3 days, I'd like to talk to a realtor. Now, a realtor could get their brain around trading because they know what it's like to be underwater. Literally, maybe, with water in the house, in the basement, or they just like, and they like the adventure of getting into something. Let's see what happens. I don't even know what. So when people are going to get into trading, I got to wonder, do they like the drama? Do they like the technology? I mean, I was attracted to it because of I'm a computer guy, and I've also been in the trading field for a very long time, and I did take the classic route. I've met I spent $20,000 in educational material way before these people were doing these. I mean, these were probably, well, it was just more in depth, and you could actually punch the person. I could see these people in the flesh. It wasn't like YouTube or DVD where I don't know. They were just like concrete people. They weren't. This guy's probably pretty concrete, but I mean, now you can have some Forex slick presentation, like some guy said. Look at the lines of Forex. I did that. There was a guy in Florida who was signed up with them because they were in Florida, and it's very slick. You know, the guy's got a nice car, and it's very glamorous. You know, it's just like if you go to the music store, you'll see Eddie Van Halen. But you're probably not going to play your best guitar if you try to play like Eddie Van Halen. So I grew up with people that wanted to play like they want to be that guy. But they're much more better to be their own self because then they're going to be like unique. But you can copy people's trades. You can copy people's singing styles. Any singing coach would tell you need to find your own voice. You'd have to find your own thing that you feel comfortable with because like I said, I was trying to sing a couple songs that I loved to death, and I thought, there's no fucking way. I'd have to transpose a song. I don't have that range in that one slot. And a lot of these people sing like up high, you know. I mean, their range is like, to have power at a high range is like a physical, it's genetic. You can't get around that. And I guess in trading, you can't get around your nature unless you did take some type of try to reprogram yourself to be a better trader, I guess, right? But you have to have tricks you do. Some people put post-it notes. I mean, people have gone to extremes like I think the drummer from the Police said he had his drum head said fuck off or something. But everybody has this like put post-it notes on your computer. I will not do a dumb trade today, and whatever if that works, right? And but then there's the new crutch, right? Do you really need that? Do you not trust yourself? It's just like with if you're going to go, say you've got 10 girlfriends or you've had 10, do you trust yourself? Not maybe you're a serial dater. The worst thing is to be a serial killer, but maybe you're a serial trader. You just can't resist. This is why you would have a demo account. There are workarounds for people that cannot handle even real money. Like I prefer not to have cash because it's so ridiculous. Like if there's a wind outside, so my buddy who had like $300, I mean, you're talking like 40 mile an hour gusts of wind. It's 20 miles an hour wind. And he's standing there outside of the store and his money is just poof gone. I mean, there's literally no way to chase that down. Whereas a credit card, unless you steal it from me, it's just nice. I mean, it doesn't matter how much the thing I'm buying. I don't have to get out a wad of cash. And these things do matter because if you're just clicking a button on your phone or on your desktop computer or your tablet to put on a trade that you think is going to make money, and you wouldn't put it on if you didn't think it was going to make money, that'd be fucking retarded. All this stuff has to occur to you. That's why this guy, I wanted to see if you do a hangout because it really depends. Well, how do you see the world? It's not going to help. There's nothing anybody's going to say on even this video here, because this guy's even admitting, hey, you got a wide stop on that? What's going on? What are you fucking thinking? How big are you in? I don't ever hear anybody talk about sizing. The only guy that talks about it is Van Tharp, and he's so boring. You don't even fall asleep. You just get irritated. He's so boring. But this is what trading is boring. Just like owning a business, you think it's very glamorous to own Starbucks. I'm sure that guy's, he had these people that were hanging out in the Starbucks and abusing it. I went into the Starbucks the other day. There was some person passed out, like just sprawled out. Nobody said anything. Nobody wants drama. Oh, you know what? You've been here for 3 hours, crashed. There was some homeless guy in there. I'm like, okay, I got it. I'm not going to say, hey, this guy here, call the police. Just people go about their business. Most people tolerate so much punishment. I mean, look at the Jews. I mean, these people were like in a concentration camp going, okay, whatever you got. The guy that survived the concentration camp, I don't understand what this thing was with the Jews and people. I don't know if it's a joke, but people, the endurance factor of going through a concentration camp. I can't remember the guy who got out and wrote a book about it, but it changes mindset. And I'm not saying that being in a 5 standard lots on the wrong side of market is like being in concentration camp, but it feels like that. You're like, I can't fucking believe I've taken this MACD signal. I'm down $380,000 on this fucking trade from this. I mean, so I'll let this guy finish his thing. I'm trying to complete my thoughts today.
Offers you a very poor risk to reward on your trade. So don't chase breakouts whenever you see a strong momentum.
Yeah, don't chase a breakout. And of course, this is also kind of a fallacy because sometimes you need to chase a breakout, drop down to a small time frame and go, you know what? This fucker's going to go into that vacuum. I could probably scalp myself a pretty $380 right now.
Your MACD histogram. This is a very useful.
Those on-the-fly decisions. See, that's the thing. It's like if you had a car that had the capability to drop down to a gear where you could go 190,000 miles an hour for just a little bit, just to get there because you knew there was open road, would you do that? And did you rehearse that, right?
Another filter that you can use, right, when you're trading breakouts. But we'll talk more about breakouts later, right? So this is just an extra bonus tip for you. Number 2, right, you can use a MACD, right, as a trend filter. So here's how it works. If the higher time frame MACD line crosses above the signal line, you look for a long bias only, right? Higher time frame.
Now this is what I was talking about earlier. If you're using this as a bias control and say, I will only trade from the long side, in a way it has use to you because now what it's saying is that the indicator light on your dashboard is saying that you're overheating, so drive slow now. And it's changing your modality. And maybe you shouldn't even be driving that car. And maybe you shouldn't even be trading even though you have a long bias because you don't have a trade plan for the long bias and you haven't looked at the dynamics of each bar and each time frame and how many trades you're going to put on and which one's going to be the scalp, which one's going to be the long-term trade. You're still confronted with the problem. Do you let it go? That's just a whole giant. It's the same problem with Starbucks. Do I get the macchiato or do I? No, I just get the same thing here when I go there every time. I get the same thing. And a couple times I experimented with new stuff, and I thought, I don't know if this is going to work out.
We're looking at high time frame here. If the higher time frame MACD line crosses below the signal line, we look for a short bias. So how do we define higher time frame? So here are a few tips, right? If you're trading off,
but if you can see it coming, and this would naturally happen to you, I can see that the shorts are going to start coming. Should I get in now, or am I going to be too early, or should I wait for confirmation? Because I'm a kind of guy that has a checklist, and I don't do stuff unless my wife says it's okay.
The daily time frame, you can refer to the weekly time frame as your higher time frame. If you're trading on a 4-hour time frame, you can refer to the daily time frame as your higher time frame.
You don't want to cheat on your trade plan.
If you're trading on a 1-hour time frame, then you can refer to the 4-hour time frame as your higher time frame. So you're pretty much using between a factor of 4 to 6. So what is 4 to 6? Right? So if you just take this 4 hour over here, divide by 1, that is a factor of 4. The daily has 24 hours, divide by 4, that's a factor of 6. Weekly has 5 daily candle bars, so that's a factor of 5. So anywhere between a factor of 4 to 6, right, that would be your higher time frame. So again, let me just go through the charts and share with you a few examples. Okay, so
there's a time frame overlay theory, right? We look for long bias, now we drop down a smaller time frame, we look for an entry. We've all heard this one a million times. It still doesn't get you around the problem that you're going to fucking be underwater in these trades.
Let's have a look, right? This time around, Aussie dollar, right? Just an example, Aussie dollar. Okay, so let's say we are trading off the daily time frame, right? So our higher time frame is the weekly time frame. So if you look at the weekly time frame, you can see that over here, right? The blue line, which is the MACD line, it crosses below the signal line. So in this case, right, from 5th of March 2018 onwards, you want to have a short bias, right? So if you look at the daily time frame, 5th of March 2018 is somewhere about here, around this region, right? You can see that you have a short bias and you would be on the right side of the trend more often than not, and it will, right, likely increase your winning rate because you're trading on the right side of the trend. Okay, so that's how you do it. Another example, right? Let's have a look, right? How about Brent crude oil?
I can't take it. I got to bail. But anyways, I think you get my point. I hope. I'm going to do another video about this really hot Asian girl that's got a new. She's an astronaut to be, and I think I like her video a lot better than this guy's because she's got a great morning routine.